Hello friends and welcome to another video on Tutorials Point with me, Richa. Today under the Corporate Management module, we will talk about working capital management. Well friends, for any organization or any startup to really function and flourish properly, they need to have a good amount of working capital for its day-to-day expenses. So in this module, we will talk about how to raise that capital and also what to do with your working capital management. Well, on the agenda today, we will cover defining what exactly is working capital, explain the importance of inventory management, explain the importance of receivables management, and lastly, we will talk about discussion about cash budgeting. So let's get started. So what exactly do we mean by the word working capital? Well, capital which is needed by a firm to meet its day-to-day expenses is known as the working capital. Whatever small tidbits are needed, to have an organization running smoothly is what is a working capital. In short, what it really calculated is current assets minus the current liabilities. So what exactly are some of the components of a working capital? There are current assets as well as current liabilities. Under the current assets, we have cash, we have marketable securities, inventories and accounts receivables. So anything which is coming into your company in terms of cash, inventory, anything which is being received by the company is coming under the word as current assets of the company. The current liabilities are the short-term loans, the accrued expenses in the company, the accounts which are payable, the salaries which goes to the employees, etc. comes under current liabilities. So when you minus the current assets from the current liabilities is what is the working capital, is one of the component of working capital. So some of the other components of working capital are inventory management, which is really how about you're managing the inventories in your company, whether it's a product or a service. Short-term financing, cash management, which is done at the company, and debtors management. How do you really manage your people who are under the debt of your company? So friends, the working capital cycle looks something like this. You have the bills which are receivable. So any kind of bills which are coming in, be it your electricity bill, your rents, your electricity bill, your phone bills, anything which is being received as a bill in your company comes in. There is an inflow of cash, there is an outflow of raw materials, wages, overheads, salaries and other day-to-day petty cash expenses which are getting out of the company or outflow of cash. Then there is work in progress, wherein the normal work happens day to day, activities which are happening, the regular workflow happens, after which you get the finished product or the service which you are really marketing in the outside in the market, which leads to your your sales debtors, and then it's again a continuous cycle which goes on and on and on. So this is what is a cycle which is of a working capital. So what exactly is cash management? Identify the cash balance which allows the business to meet its day-to-day expenses but reduces the cash holding cost. I would suggest that any company or organization or any management, corporate management should not hold too much money. It should just have that much of money or cash which is needed to have its day-to-day expenses covered. If there is too much of cash holding into the company, that's not good for the organization. Forecast of cash in versus cash out per month, per week, per day, based on the past experiences and updated with the new knowledge. So you need to plan ahead what is going to be the cash flow, how is the cash flow going to go out, what are the day-to-day expenses or what are the week-to-week expenses. You need to plan and forecast all of this beforehand itself, right at the beginning of the month, so that you have the exact kind of cash which is needed to run your day-to-day expenses, and that is exactly what cash management is all about. You don't want to be running an organization or a company wherein there is a cash crunch for even its day-to-day activities, right? So you need to forecast and plan all of this way much beforehand so that you don't get at a loss when there is an expense incurred and you don't know what to do about it. That's where you've not managed your cash properly. So friends, now what we will talk about is receivables management. Now receivable is anything which is coming back into your organization. I'm sure most of you have heard of cashback facilities, which many people give out as a brownie point for people to come and buy their products or services. So identify the appropriate credit policy that will attract the customers. Now you need to be a little careful over here, because if it is too liberal, it can lead to high cost of finance. If you're giving out too many liberal things in terms of giving too much of cashback offer or giving multiple options to your customers, it can lead to a cash crunch or cost at the cost of the finance department. And if it is too strict, on the other hand, it may be uncompetitive and also result in loss of business. So you need to maintain a fine balance between not being too liberal as well as not being too strict when it comes to your receivables management, which is nothing but a cashback offer. Monitor regularly with regards to how exactly are the customers responding to it, and make sure that you have a foolproof plan of action for receivables management. Cost of credit must always definitely be kept low. Do not go out and purchase too many things on your credit card, because ultimately what happens is that you suffer as an organization. So the cost of credit should be absolutely low. Do not be under a debt situation. Talking about inventory management, well, as an organization or as a corporate, you will have definitely inventories which are coming in. So how do you manage those inventories? I would suggest there has to be a very fine balance between ordering the products, receiving the products, as well as managing it into your warehouse or stock house, whatever you have. The level of inventory should be such that the total cost of ordering and holding inventory is the least. And that is where most of the organization really falter. Stock out cost should also be minimized. As much as possible, you need to make sure that your stock out cost is also to a very bare minimum. Fix the minimum safety stock level and record, or rather reorder level and ordering quantity, so that the inventory cost is reduced and also the management becomes more and more effective. Do not have too many products of yours into a stock house or inventory. It's important and essential that you have least amount of things, so that the management also becomes very, very smooth functioning, rather than having a cash crunch later on. So ways to have a proper inventory management. There are 3 ways in which you can manage your inventory. One is the ABC analysis, which is always be closing. The second is just-in-time method, wherein you just in time need to order for a particular inventory. And economic order quantity model, which is basically to understand that how well do you really manage it in terms of your economy, whatever orders that you have received. Well, to conclude this particular module on working capital structure, we have to understand that your working capital management is critical for smooth functioning in any kind of enterprise. So let's make it very, very simple. Let's not have too much of things that you need to do at an organization level, wherein you are not able to manage your cash flows properly. Cash management, inventory management, short-term financing and receivable management are important components of a working capital, and you need to keep in account all of these different components so that you have a smooth working capital management. Lastly, forecast of cash in and cash out is very important for efficient working capital management. Please be very, very aware of how much cash or money is coming in, how much cash is going out of your organization, so that you are able to plan, forecast and have a very smooth functioning of cash management in your particular organization or management. Well friends, that brings us to the end of this very interesting module. I do hope you have enjoyed listening to us as much as we have enjoyed teaching this to you. Have a great day and thank you for watching us.